Thanks for joining us today. Chris Griffith, Henry Wheelwright here. Just wanted to get a couple of words out today, given the events that have transpired over the weekend in Iran. This is why you have us, and this is the hard job for us on subjects that have a lot of emotion and feeling around them, like what we're witnessing in the Middle East, for us to dive into that and really focus on just the financial aspects and how that's going to influence everything for you with your investment portfolio, inflation, and other moving parts. But that's why you've got us. That's why we're here. We want to take a minute and just share our thoughts. And Henry, I don't know if you want to add anything to that.
No, I think well said. Anytime you're talking about monetary implications and financial markets in the wake of war, conflict, loss of life, sometimes it just doesn't seem appropriate. But that's our leadership role. We wanted to get a note out. Markets today, particularly in the energy sector, the area that I think most investors, even if they're casual investors, would understand would be a key point when you have conflict like this in the Middle East. Energy prices have been up. I thought it was a great opportunity just to share our stance. It's early, it's day one. What would you talk about as it relates to oil and energy specifically?
Yeah, you hit it, Henry. I think from a purely financial perspective, what we're witnessing in Iran is really going to be focused around oil, secondarily travel. Oil is the big story here. And we'll try to share with you a nice report from Goldman Sachs as well that put the magnitude around a barrel of oil at potentially $15 increase in the price of a barrel of oil if this goes for a full month and the Strait of Hormuz is fully closed for that entire month. And we don't, release anything from our strategic petroleum reserve, and no backup plans are in place. So there's a lot of wiggle room in between there, but that's the potential. Oil opened this morning at $72, up $5 or $6 from Friday's close. So we've started that trend already. But I think there's real economic implications to that, right? What does that mean for us at the pump? What does that mean for inflation? So I don't know, Henry, if you want to share some thoughts around that. What does that increase in the price of a barrel of oil translate into financial assets and for people that are listening to this?
Yeah, no, I think I'm taking a step back. For those watching this, Strait of Hormuz in general, you get a 30 to, I think, 60-mile wide area where tankers deliver a lot of oil. I think something like 20 million barrels per day go through the strait. It's why it's a key point. The disruption of the conflict there has significant implications. Also has implications to countries that are net importers of oil, specifically from Iran. At the top of that list has been India. I think India imports roughly 85% of their oil from Iran. About 60% of that goes through the strait. China, somewhere around 40%, with the majority going through the strait. You can add Korea to that list, as well as Japan in general. So you have some major economies reliant not only on Iranian oil, but relying on, of course, on the strait being open and free. I can't speak to the logistics. I'm not an expert there, but I think when I digest a lot of the research reports and talk to some of the analysts that we rely on here at Stablepoint, that's their focus. Oil prices go up, inflation and cost of goods go higher. That has been a narrative that we've talked a lot about as it relates to the Fed and cutting interest rates. And probably the longer this conflict goes on, the uncertainty around the length of the duration will maybe put into question some of those rather positive global growth outlooks that we had coming into the year. I will tell you it's way too early. I wouldn't overreact yet. And of course, recognize this has a lot to do about global conflict and war, which, of course, as we started this call, is a pretty serious thing.
That's a very serious thing, and it's not a new thing to us here at Stablepoint. 25 years in practice. We started out our careers right after 9/11. We've seen a multitude of conflicts in the Middle East. They're all very significant. They all hit home to all of us in a lot of different ways. But financially, this really is all about oil. We are focused on that. And I think what we've seen from our experience, right, over the years, every conflict is different. We all hope that this does not lead to a long-term war. But these conflicts, oil tends to jump quickly and early. And oil has the ability and tendency over time to come right back down just as quickly as things are remedied. Now, if that takes 2 weeks, if that takes 6 weeks, as you mentioned, Henry, the longer it takes, the bigger the impact. And from an economic perspective, too, right, everybody's talking about inflation. Every $10 that oil goes up in price, it adds 0.2% to our inflation rate in the United States, right? I don't know your thoughts about that with inflation and how oil hits home.
Yeah, I mean, I think I touched a little bit on, the connection right now to some of the outlooks that we've had. We came to this year with strong outlook for global GDP growth in general, up over 3%. Our expectation was for capital markets and investment markets to have close to double digit earnings growth. And we're just 2 months in the year. We've had a number of videos. Just last Friday, I was talking about rotation AI. A lot has happened just in 2 months. What has really changed? I think the big item here is this potentially extends a period of time in which the Fed might be less accommodative to cut rates, may change some of those initial forecasts on how many rate cuts we get here in the US. But I think you hit the nail on the head. We've been together on this with clients for 25 years. We've seen oil spike to 140. We have been in a period of time with historically very low energy prices around oil in general. Chris opened this call talking about the spike up into the 70s. Again, I remember periods of time where we were in the hundreds for prolonged periods. I think what I would add, and it's really a piggyback on the video that I put out on Friday, interesting is diversification continues to win for our clients. As we do this video, capital markets are actually positive. The major US benchmarks are up right now. We're seeing a rotation into tech, which last week was down. Areas in the market that have been discounting other factors are finding a sweet spot and home for capital. That tends to be a bullish signal when money is not leaving the equity markets entirely, just finding a rotation. Still a very defensive market, still one in which you want to pay attention to your plan. But I think diversification, one of the oldest and simplest rules, is playing out again. This conflict is just putting that on the table.
Oh, I couldn't agree with you more. I think just out of sake of time, just know we've been through this before. We've seen this, unfortunately, played out many times. And it's really hard to sit here and talk about finances and money at a time like this, when I'm sure that everybody watching this right now has got a completely different feeling about what is going on in the Middle East right now. We're incredibly sensitive and respect that 100%. But hopefully you can continue to lean on us here with everything going on. Know that the way that this is going to influence your finances, your investment portfolio, your financial planning, we're going to continue to be on top of that, continue to be out in front of you with information, updates, and thoughts around everything that's transpiring. But
well said. Appreciate your trust and confidence. Hope everybody remains safe and healthy out there. We're here to get you through this. Reach out if you have discussions specifically to this. I'd expect that we're going to be commenting in the future more and more as this continues to play out.
100%. Be safe, be well. Have a great week.